Hey everyone, it's Ryan with Stock Investing and Trading 101. Yesterday we introduced the Robinhood $10,000 trading challenge, and we are already having another successful day of trading, up a quick 0.5%, which is about $65. Today we're going to be talking about how to sell cash secured puts on Robinhood. So yesterday we introduced how to sell covered calls on Robinhood, and this is pretty much the other side of option selling. So when you're selling an option, you can either sell calls, which is typically a covered call, or you can sell put options, which are typically cash secured puts, which is what we're talking about today. I actually sold a cash secured put today, so we kind of have a real life example to go off of. But first of all, let's talk about what is a cash secured put. This example is a little bit difficult because it has a awkward strike price. It has a $20.89 strike price because of a dividend. But let's just round it up. Let's say the strike price is $21 to make it easier. Essentially what happens when we sell a put option, a cash secured put, is that we are selling somebody the ability or the pretty much the option to sell us their shares at the strike price. So for this example, we are selling somebody the option to sell us their shares for $21 or $20.89 per share. And this goes until the expiration date, which you can see is April 1st. So let's think, why would somebody want to sell their shares for $21 per share? Let's look at Rocket Mortgages, which is the underlying stock that we're selling the option on. And it currently trades at about $22.50 per share. So the only reason that somebody would want to sell their shares for $21 per share, because they can sell it right now on the open market for, $22 and change per share, is if Rocket Mortgages dipped below the strike price. So if Rocket Mortgages dips below $20.89, that's the only reason that they would consider assigning their put option. In which case we would pay $2,089 and we would then own 100 shares of stock. So that's what a cash secured put is, and that's what it means when you're selling a cash secured put. Is you're pretty much it's a different way to purchase shares. It's actually a way that I prefer when I'm buying shares of a company that I want to invest in. Instead of just going to the stock and buying 100 shares, which we could buy 100 shares of Rocket Mortgages right now for $2,200 and $2,243. Instead of just going and buying the shares, what we could do is do what I'm doing and sell a cash secured put. We take in a credit up front. So in this situation, we took in a $33 credit, and this expires on April 1st, which is just 1 week away. So using this option, there's going to be one of two outcomes. Either we can have the option expire, we keep the $33, we get our collateral back, and we move to the next trade, or the put option gets assigned, we keep our $33 credit, and we then purchase the shares, 100 shares at $20.89 a piece. Factor in our average credit, so you can minus another $33 or 33 cents from each share. So it would be $20.56 per share would be our average cost, which you can see our break-even price right here. Rocket Mortgages break-even priced $20.56. This is how you can tell what your average cost would be if you get assigned. Now, if you sell an option on Rocket Mortgages, let's just try an example. So let's say I wanted to sell another put option using the same strike price. Like I mentioned before, it would require a collateral. So the collateral would be 100 times the strike price, so $2,089 is the collateral. So that's what a cash secured put is. That's what the requirements are as far as collateral and how much money you have to trade these options. So they do require a decent amount of capital. And to trade them on Robinhood, all you have to do is click on trade, go to view options, click on whatever expiration date you want to use. Most people recommend between 30 and 45 days out. Then you would click on sell and put option, and you can pick whatever option that you want to sell, as long as you can afford the collateral. The further in the money you go, the more premium you're going to receive, but also the more risk. The more out of the money you go, there's going to be less premium, but there's also less chance of getting assigned, which is kind of what you want, is the option to expire. You're not really looking to get assigned with this strategy, but it certainly could happen. Next, let's talk about the Greeks. The Greeks are very important when it comes to trading options, and if you are at all interested in trading options, whether it's buying or selling, I would recommend you watch a video to understand the Greeks. So there's 5 main Greeks. You have delta and gamma, which kind of go together. Then you have theta, which is time decay, and if you're selling options, theta is your best friend. What this means is, as you can see, we have a theta of minus 0.0514. This means that every day this contract will lose about $5 in value because of time decay, also aka theta. You also have vega, which is volatility, and rho, which has to do with interest rates. But if you're selling options, I think your main concern at this point, at least getting started, is theta. So theta is your best friend, and you want to look for, higher implied volatility, which you can see this option has an implied volatility of 73.32%, and it has a relatively attractive theta. So pretty much every day this option is going to lose $5 in value, which means that we can purchase it back for $5 cheaper, pretty much giving us $5 of profit. And that's the whole point of selling options, is to benefit each and every day the contracts lose value, and since you sold the contracts, obviously you want them to go to zero so that you have essentially sold somebody a worthless contract. So let's start from the beginning just to really hammer this point home as to cash secured puts, their requirements, and how to sell them on Robinhood. We're going to use AT&T as an example since it's such a easy stock to trade and it's relatively cheap. Let's say that we want to sell a $30 cash secured put on AT&T. So what we do is we go to our expiration date. Let's say we want to use April 30th, which is about 37 days or so away. We want to use the $30 strike price, and as you can see here, the $30 put expiring on April 30th is selling for 81 cents. So what this means is that, first of all, it will require $3,000 of collateral to sell this option. You won't be able to sell it unless you have $3,000 available in buying power in your account, just because of the risks involved. You could lose, the maximum amount you could lose is the full $3,000 if AT&T were to go to zero by April 30th. So once you have the $3,000 collateral, you can sell one contract with that $3,000. The limit price is going to be how much you receive. So let's say we sell it for, $81 or 81 cents. Multiply that by 100 and you get your minimum credit of $81. So as soon as we sell this option, we take in $81, and from there we can look at the Greeks. As you can see, the theta on this option is much lower at just 0.0142, which pretty much means this option is only losing $1 and change every day in premium, and the implied volatility is only 27%. This is why it's important to understand the Greeks and to, know what you're trading, because if you trade or if you sell a cash secured put on a stock like AT&T, typically it's going to have extremely low implied volatility, which means you're going to be taking in less premium upfront, and you're going to be getting less theta because it doesn't have an expected move that's that big. So people aren't going to pay a high premium for an option on a stock that isn't expected to move very much. So that's just a quick intro to cash secured puts, and we also did one on covered calls yesterday if you want to go check that out. I'll be updating you guys with the how this trade is working out for me, as well as weekly updates on the $10,000 trading challenge on Robinhood. Our goal is to get to $25,000, hopefully, by the end of the year, but, we'll see what happens, maybe sooner, maybe longer. But yeah, as always, guys, thanks for watching the video. Don't forget to smash that like button, subscribe to the channel if you haven't already, drop a comment, let me know what you're trading, what you're buying, what you're selling, what you think is undervalued. I'm always interested in sharing trading ideas. Check the comment for links to free stocks from public and other brokers, and stay tuned for more. Thanks for watching.